Good evening, everybody, and welcome along to our first evening webinar of 2025. Before we start, I would like to pass on some apologies at the beginning. These webinars are normally introduced by Steve from Rugby League Cares, and Steve has his builders at home, and it's a bit of a mess, apparently. Now, Steve is on the webinar with us. He will come on at the end of the webinar, but I was just asked before we start to give his apologies for missing the opening and the beginning. But he is here and he will be with us. And I'll invite him on at the end if he wants to say a couple of words. But he would say, thank you so much for joining us this evening. And it's an absolute pleasure to see you. I think it's fairly unique because this is the first time on these webinars that we've had representatives from all of the Super Leagues. That's the wheelchair, the women's and the men's game. So you are more than welcome along. We do run these webinars once every quarter. We have done throughout 2024. We're just embarking on the first one of 2025. If you want to catch up with any of the information that we've delivered previously, all of our webinars are on the player portal. So you can get access to them and watch them back. I make a sweeping assumption that everyone on here knows what the player portal is, but we do have a library of webinars now which are being banked there. Now, we are going to touch on some of the subjects that we've previously covered, just as a little bit of an update, because we're now at the start of 2025. We're looking at our money and our finances as we move through 2025. And so this session really is a catch up on where we're at, especially with the economy and things like the cost of living. But we will spend a little bit of time looking at financial scams and frauds, which is something that's really increased in the United Kingdom over the last 5 years. And the numbers are quite daunting and quite frightening. Before we actually start, though, I just want to quickly confirm, because we're recording the session, that all the information is correct at the time of this recording being taken, and all the information relates to the 2025-26 tax year, but we're not going to be covering tax, so don't worry about it. Also, I'm not here to give you any financial advice at all. We are, though, just taking a practical look at money and finances and giving ourselves one or two jobs to do that will make ourselves better off. We at Mattioli Woods support Rugby League Cares. I'm not sure if you're aware, but in the background, our articles of association mean that some of our profits that we make every year go to charities and third sectors. And we, of course, support Rugby League Cares in that way. But also we come on and talk to you. And again, I am not here to sell you financial advice. We are here more as a learning exercise with how to look after our money and what things we should be aware of. Now, as I've already mentioned, I'm not on my own tonight. Steve is in the background and will be joining us at the end, but otherwise, my colleague Mark Redmond is here with us, and he will be able to answer any questions that you've got. So on the right-hand side of the screen, you'll see a panel. At the top of it says Q&A. Click on Q&A. There's a text box underneath. Type a question in there and it will just go to Mark. So nobody else on the webinar will be able to see your question. There are no stupid questions whatsoever. Send that through to Mark and he will personally reply back to you. And I'll hook up with Mark at the end and see if there's any pertinent questions that we want to collect on the recording that we're taking this evening. As well as that, can I just confirm we do it in everything that we do? We are not going to use your email addresses that you use to log in with for any other purpose than this particular webinar. Now, what tends to happen is at the end, we get a flurry of questions in. We don't have time to type back. We'll end the webinar, but tomorrow we will email back to you using the email addresses that you've got, any answers to any questions that we can't answer tonight. But we don't use your email addresses for marketing purposes. We don't sell them to third parties. You won't receive any information from us. When we've finished, we delete them, we get rid of them, answer questions. That's the end of the matter. So before we move on to the main topic that we're going to cover tonight, which is scams and frauds, financial scams and frauds, which is something that we want to have a look at, I just wanted to take this opportunity to very briefly touch on some of the things that have changed over the last 6 months or so, which I think are really important for everybody to consider with their money and their finances. Now, first of all, we can't really plan ahead unless we take the temperature of the economy, if you like, because the temperature of the economy directly relates to how much money we have. So just think about all of the things that you see regularly in the news headlines, and a lot of them will have a knock on effect on what we pay out on. So things like the rises or the increases in council tax that we're seeing across the country, those things, if we own a property and pay council tax, will obviously have an effect on how much money we have left at the end of the month, because if that's increasing, we'll have slightly less. So I think there are a few important areas that I really focus on to see what's happening and where we're at. And there's some good news and bad news. There's some good news with things like food and catering in that at the moment, the prices are fairly stable. If you go back 12 months, prices were rising at about 7%. If you look at it now, it's about 4%. So you may see headlines in the news about this and that is increasing and the cost of living is increasing, etc. But as far as food goes, it's actually fairly stable at the moment. And the knock-on effect from that is that when you're doing your weekly shopping and buying in the food for your household, you roughly know that each shop is going to be very similar week on week. Now, obviously, it's something to keep an eye on, and it's one thing we always talk about. We will come back and look again later in the year to see where we're at then. But at the moment, prices are fairly stable. And that's also the same with the fuel at the pump. Now, most of us run cars to either get to training and back or get to work and back. So, obviously, the cost of fuel does have an effect on our budget from a month to month basis. If you go back a year, the prices were just over 140. Fast forward to February last month, and prices are just below 140 at £1 93.3p on average across the UK for last month. Actually, this month prices are slightly lower again. So again, if we're factoring in the cost of fuel into the money that we're spending, then we know that we're in a period of stability as far as fuel going in the car. It won't always be that way, but at the moment, it seems fairly stable. And we've got a long way to go to get back to 18 months ago when we were paying about, oh, well, just slightly over 150 for a litre of unleaded petrol. Obviously, diesel being slightly more expensive, but in relation to each other. The one thing I'm going to come back to and very quickly talk about later on is energy. So I'm not going to say too much about it, other than a year ago, we were at £1,928 a year for the average UK household. That then significantly dropped as we've gone through 2024. That is now steadily rising back up again as we head into 2025 to the latest one, which is for April to June 2025. So on the 1st of April, the gas and electricity prices will rise in line with the regulator's price cap. And so you're back up to about 1,849, which is only barely below what we were 12 months ago. And those lower amounts that we saw through 2024, through the majority of the year, those have been eradicated and essentially replaced. But I'll come back and talk about energy in a short while, because that's a really important point for us to consider with our money. So something that we've already covered previously, but this slide is just a reminder. I keep saying it over and over again, but when you're spending money or when you're thinking about where your money's going to, you just need to ask yourself your three standard questions. And I'm going to keep mentioning them all the webinars. Do you really need it? Can you really afford it? And if you are going to do it, can you get it cheaper? Do I need it? Can I afford it? Can I get it cheaper? We genuinely should be using our thumbs and mobile phones that we carry around with us everywhere just to check the prices of things that we're seeing right in front of us. Because after lockdowns, we're back shopping, we're back visiting shopping centres, buying things that we immediately see, whereas we might be able to save money if we just spend a little time and put a little bit of effort into shopping around for good deals. So I think as we look to the first quarter of 2025, because we're in spring now, so we're looking ahead to spring, maybe it's a time for you to spring clean your finances. And I think there should be a few things on everybody's list just to consider. The first one is insurance. Now, this has been a roller coaster ride as far as insurance goes, because we've seen very big increases in the cost of insurance in the latter half of 2024. the beginning of 2025, we've just started to see those insurance costs come back down. Now, all of you on the webinar have some kind of insurance: home insurance, car insurance, buildings insurance, life insurance. You all will buy it in one form or another. So over the coming months, if you do have any insurance contracts that are coming up for renewal, do bear in mind it may be slightly more expensive than it was last year, but there are ways in which we can beat that. So if you're not friendly with the online supermarket, financial shopping sites, now is the time to get friendly with them. We always recommend you use more than one, because not all insurance companies put all their products on all the sites. So if you use two, you're getting a good spread. And just to give you a little personal story on this, my wife got a car insurance policy renewal through. It was essentially double what it had been the previous year. There's no way we were paying that. Went online, did the requisite searches, found one that was the same price as previously, and managed to retain that cost and not have any increase. I think it was a few pounds increase, but it certainly wasn't double. So again, you really do need to do the work, the legwork, to make sure that you're not overpaying on things like insurance. I'm not going to tell you to get a bank account to get a better rate of interest. I am going to tell you to switch your bank account regularly so you can take advantage of special offers that are in the marketplace. Just quite literally, we tend to, older people like me, which I don't do, but we tend to have the same bank account we've always operated for the last 10 years or 5 years or 15 years, and we never change it. But it's a really competitive time in the market. So if you switch your current account using the government backed switching service, you'll probably get paid for switching your bank account. So if anyone on here wants a free 150 to 175 pounds, all you need to do one evening is set aside half an hour to use the government switching service to switch your current account to a new provider. The provider will do all the hard work for you, switching standing orders, direct debits, everything like that. You just do the easy bit of filling in an application form. They'll do the rest. You'll get a good rate of interest. You'll get paid for moving your account. And also, you'll probably get a lot of smart features to go with it, like budgeting apps and tools and things like that, which are really helpful for helping to manage your money. So go away and have a look at that one. I did mention that I was going to come back and talk about energy. So very quickly, no one who is a homeowner and paying their energy bills. I appreciate we do have some young people on the webinar, and you might not have left home yet. But for those that do have their own home, operate their own home, pay their own bills, you should not be on the standard tariff for dual fuel, gas, and electricity paying by direct debit. That's the rate which is going to go up on the 1st of next month. All of the energy providers in the marketplace have a discounted tariff for you to go on to. Now, over the last 6 months, it's gone up by 13 to 14%, somewhere in that region, in incremental increases. The biggest increase was the 1st of January, where it went up 8%. And we're expecting the energy bills on the 1st of next month to go up by a further somewhere between 2 and 3%. So now is the time to go on to a discounted rate. But you want to make sure that there's no early redemption penalties on those rates, so that it's open for you to switch to any other rates at any time if you want to. But no one on this webinar should be on the standard tariff. You should be on a discounted tariff. And also, the numbers we were looking at previously are based on the average UK household. Now, no one is in the average UK household, because it's basically a 2.5 rooms upstairs, 2.5 rooms downstairs, with 2.5 people living in it. That's the average. So no one conforms to that. It is the more you use, the more you pay for. So, two things that we need to do: certainly be energy wise about the amount that we use, and be on a discounted tariff. So have a look around. You can literally do that now, while I am talking to you, if you've got multiple devices at home. And we regularly do this, and people message in and say, I've saved £20, £30 a month. So again, if you do manage to do that during the webinar, let Mark know and he'll let me know at the end. But please don't be on the standard tariff. If you are, you need to get off it. Another really important area of personal finances, which has been changing quite a lot over recent times, are interest rates. Now, we in the UK have a central bank. It's called the Bank of England. They set rates for the markets. You're probably wondering why that's of interest to you. Well, essentially, when they set a rate, all of the products offered by financial services use that rate to price themselves. So if you want to borrow money, it might be slightly above that. If you want to save money, it might be slightly below that, and they'll take a cut. But their margin is based on the rate that the Bank of England set. Now, I'm sure you're aware that rates went very, very high and have been very, very, very high over the last 18 months, peaking just over 5%. Currently, on have been on the way back down to 4.5%. However, there is no guarantee that they will carry on coming down. They may, with rising inflation that we have at the moment, possibly go back up. So if anybody knows exactly what they're going to do, please let me know. We can put a little bet on where the rate's going to be, but we expect during 2025 that rates will maintain at 4.5 or perhaps slightly drop down from 4.5%. But if you look at that chart there, you'll see there's a 10-year period where they struggled to break 1%. And I don't think we're returning back to those days very quickly. Now, having a high interest rate is bad news for borrowers because it's expensive to borrow money, but it's good news for savers because for the first time, when we put money in a bank, we're actually getting paid interest to put the money there, which is a reminder that if you are a saver, you really need to make sure you are getting rewarded for the money that you're putting in the bank. I'm going to, again, this wasn't the main part of the webinar, but I'll just very quickly touch on those two areas one by one. First of all, as far as borrowing goes, as I mentioned, high interest rates mean that you are paying more to borrow money. So let's just as an example say we're carrying a balance on a credit card. It will cost us more, but as rates come down, it will cost us less for us to service that debt. Very similar with things like mortgages and secured loans as well. Now, everybody at some point during their financial lives is a debtor. I don't know anybody who's got hundreds of thousands of pounds to go and buy houses and cars and all the rest of the things that we want to have. So we use borrowing to get those things. Now, the most common types of borrowing are the short term ways of borrowing: credit cards, store cards, overdraft facilities. Can I just remind you, you're not lucky to have those facilities. You should actually be actively shopping around to find the best deal in the markets for those products. So please don't simply just accept what you've got. A lot of people, again, certainly in my generation, go, "Oh, I've got a credit card. It works just fine. I'll just keep it." No, switch it across from time to time to take advantage of deals like 0% interest on borrowing, which is still free money. And there are still short offers in the marketplace to do that. So if you are carrying any kind of short term borrowing balances, do have a look around because you can still get it down to zero. Always shop around for the best rate. And I very quickly have to say, if you are struggling with your borrowing, um, very simply just sit down and write down a list of everything that you owe to everybody and focus on the first one on the list. And if you write them down in the order of the percentage rate that you're paying money back, the annual percentage rate, start with the most expensive one first and work down to the cheapest one. A couple of things with that. Number one, if you're able to tackle that, please do. Number two, if you aren't able to tackle it, then you can get help with your money there. There are lots of things in place to help people who are struggling with debt, to essentially make sure that you get debt free in a reasonable period of time. But they'll need to see a list and they'll need to know what you have and where it is. So, really important that we make sure we know what we have and where it is. So, we're not overpaying in this time of high interest rates, which will be with us for the rest of 2025 as we look ahead to our financial year ahead. Another really important thing that I want to mention as far as borrowing goes is mortgages, because it's a hugely topical subject at the moment. We could do a whole 45 minutes just on mortgages, I can assure you, but it would be duller than our session tomorrow on drying paint. However, an incredibly important point is that there are some homeowners on here, not everyone, I know, but there are some homeowners on here who will have a mortgage which is going to need to be renegotiated in the near future because you're coming to an end of a fixed rate deal or a variable rate deal, but some kind of deal will be coming to an end. Now, the number one tip with this is to make sure that you start the renegotiation of your mortgages 6 months in advance of when you're due to renegotiate your mortgage and go on to another deal. Why would we do that? Most mortgage offers last for 6 months. And what we want to do is get one in place very early on. Now, a good mortgage broker will renegotiate that all the way through the 6 months that you've got. So if interest rates rise, you know you got a good deal, keep that one. If interest rates fall, well, you can get rid of that deal and go on to a new one at a lower rate. And we can keep renegotiating that right up to the point where you have to renew your mortgage. So that is a very important point with mortgages. We have covered this last year. Most of the information remains fairly similar, but there are now more mortgage products in the marketplace than there were back then. I think we're up to about nearly 14,000 different mortgage products in the current marketplace. So that's why we need a broker to look at all the different mortgage products that we've got available and choose the right ones for us, because otherwise we don't have time to look through 14,000 different mortgages. So the flip side of the coin with high interest rates is savings. And again, just something which you might not know, but which is very interesting with your personal accounts, is that everyone has something called a savings interest allowance. I hope you've heard of it, but the majority of people haven't. If you are a 20% taxpayer, you are allowed to earn £1,000 in interest, but when you go over that, you are taxed on the interest that you're earning. If you're a 40% taxpayer, you're allowed a £500 allowance. When you go over that, you are taxed on the interest that you're earning. And if you're a super high rate of taxpayer at 45%, your allowance is zero. Now, if you're taxed on interest on your savings, that is a tax on top of the money that you earned and pay tax on in the first place. So it's double taxation. So we really need to watch out for this. And the best way to avoid being taxed on any interest that you're earning or growth in investments where you would have a capital gains tax to pay is to use ISAs. They're there specifically for this reason. So cash ISAs, you can put money in. It is not invested. It's very safe, but you do need to renegotiate your rates from time to time to try and get the maximum amount out of it. They're underwritten by the Financial Services Compensation Scheme. It's an insurance policy that backs it up to the value of £85,000. If you're getting up to the value of 85,000, open an ISA with a different financial institution because it's per UK banking license. So, open a different one with another provider. We also can use ISAs for stocks and shares as well. Those are our investments. Most stocks and shares ISA providers have a portfolio of things that you can invest in, anything from global markets to gold to property, commercial property. There are all sorts of things that you can be involved in. And most people link it to a global stock market to try to get good medium term to long term returns. Cash savings are short term. We do also have things like lifetime ISAs for people who are thinking about buying a home and need to put together a deposit. Really, you should only use it for a deposit for a house. Other than that, you can get your money back later on in life. But if you close it and just have your money back, you will lose money on what's gone into the lifetime ISA just because of the maths and the way they do it. I don't have time to go into it in great detail, but you get a bonus of 25% of the money pay in. You did hear me right. It's a bonus of 25% on the money you pay into a lifetime ISA for 18 to 40-year-olds who can open them. So again, have a look at that, but it really is for saving for a deposit for a house. So the overall allowance is £20,000. The restriction on the lifetime ISA is £4,000 as part of your £20,000 annual allowance. So we must use ISAs if we are having a significant amount of money in savings account and we start to push up against the savings interest allowance, which I've gone through with you. So now you know all about it. So please don't pay tax on it. So there's a little bit of a warm up with our money and our finances. I think those things that I've covered are the really important points for you to consider when you're looking at managing your money. And we're looking ahead to the rest of 2025 and what we're going to be doing with our money and finances and budgets and things in the economy that might, influence how much money we have. The other side of the coin, as well as looking after our finances, is to make sure that nobody nicks our money. And can I just say, since COVID-19, the number of financial frauds that are taking place has just spiraled since then. Now, financial fraudsters really came into their own in COVID-19 when we were locked down because we were at home, and they thought of all sorts of things to try and con us, like you need to put your information into this website to get a parcel delivered, or there's not enough postage been paid. And that's where they really came alive. Now, there are two types of financial frauds. There's a small time fraud, which is trying to just get us to do something to either give them our personal data or give them a small amount of money for things like undelivered parcels and things like that. Or the second type of fraud is a bigger fraud, which is trying to get hold of our pensions and our investments that are part of our long term financial planning. So we're going to have a look at those two different areas with the time that we have remaining on this webinar, just to make sure that if you're looking after your finances and you're making the very best of them, you then don't go and lose them all to some kind of scam or some kind of fraud. Now, what scammers and fraudsters predominantly do is they use current affairs or social circumstances to try to defraud us out of little bits of money or to try to capture our personal information: names, addresses, bank account numbers, dates of birth, passwords, anything like that. So they will send out texts, they will send out emails to try to get us to respond to the text or respond to the email by clicking on a link, and therefore will start to collect personal information about us that they can either put together or just sell on to another party on the dark web. Now, it's worth noting that all registered charities in the UK are listed on the .gov.uk website. Why do I mention that? Well, at the moment, the number one scam which is taking place is to try to get people to make charitable donations to things that are happening around the world. But that money is going to uncontrolled and unregistered charities. So, if ever you're approached for any kind of money, .gov.uk lists all UK registered charities. So you can very quickly, with two thumbs and 30 seconds, check if they are legitimate. Um, Other areas that are predominantly taking place in 2025, shopping special offers and fake auctions, which you will see on things like Facebook, on X. I nearly fell for it the other day. I was on Facebook and saw a particular brand of running trainers were 50% off. So I clicked on the link on Facebook. It took me through to there. I was just about to think about buying them when I thought, hang on, I'll actually log off and go to the official website and check if they're there. And funnily enough, on the official website, they weren't there. So it was a scam. Also, during this time of financial distress for some people, centered around the cost of living issues that we're experiencing at the moment, scammers and fraudsters have come up with things like fake loans and fake financial help offers. We do have some websites at the end of this webinar which will tell you the places that you should go to, and I will explain why you should go to them if you are struggling with finances. But you can very quickly check who is registered by using the Financial Conduct Authority's website. It's super simple to use. There's loads of information on there, and I'll even tell you where you can find my details on the FCA website in a little while. But I'm pretty sure that a lot of us have been targeted by this. So you should have a quick poll on screen, which is asking you, have you been targeted with emails and texts or phone calls that are scams? If you just quickly know, yes, you have, let me know, yes, you have been, or no, you've not been. This is the only time during the webinar where I get to relax and chill for about 20 seconds because all of your votes need to filter through to me so that I can see them on the screen here. So I am literally going to pad, which does remind me actually, while we're halfway through, just to let you know, if you have any questions or any issues that you need help with, you can pop those questions through to Mark and he will be able to answer them. And again, they're not broadcast to everybody else on the webinar. It's private and it's in confidence. So we are unanimous. 100% of people on the webinar have been targeted by scam calls, scam texts, and scam phone calls. That just explains how prevalent it is. And so, could I please underline what we should do when we receive something through? This is if you see something on Facebook, if you see something on X, if you get a text, a phone call, anything like that through, the first thing we should do is stop. Now, most scams try to get us to take immediate action. Our gut reaction is to immediately reply back or answer the phone and start talking to the person that's there. We should immediately stop and just consider our position. Just think before we give away any personal information. We want to keep ourselves safe. Step two is just to challenge your thinking around what's in front of you or what you're seeing. It is okay to reject offers and approaches from people. They won't take it personally. If they're a genuine retailer or a genuine person approaching you, they'll go, no worries, and they'll move on to the next person. Only scammers and fraudsters will persist to get you to rush or to get you to panic. Genuine retailers will walk away and just move on to the next potential customer. And lastly, to protect yourself if you have made a mistake and you've realized after the point. If you have certainly departed with financial information, call your bank immediately. Get them to put a stop, get them to investigate any suspicious activity, and get them to change your account details. Now, it really is incredibly simple for banks to change your account details over, send you a new card out in record time and make sure that they stop any fraudulent activity. And there may be some redress for you if you have been. We'll have a look at that in a second as well. But if you want any more information about this simple 3-step process to try to protect yourself, it's on the actionfraud.police.uk website. And it's just a really interesting site to have a look at, not least of which because if you're a victim of a financial crime, you can ring them and they can counsel you on that. Because can I just say, you feel stupid and you feel a bit down in the dumps about it. And they're actually really good on that helpline of A, protecting you to make sure nothing further happens, but B, also letting you know that you're not stupid and you shouldn't be down about it because it happens to lots and lots of people. Now, the second thing that I was speaking about was the bigger financial crimes. The cherry on top of the icing on top of the cake for scammers and fraudsters is to get hold of big amounts of money. Now, here we are looking more at your savings, your investments, and your pensions. Those are ultimately what they're trying to get to. And they will try all sorts of different ways in which to try and get information from us that will try and get us to participate in a financial scam or a fraud. Can I just say there's one overriding rule with this, and this goes for my trainers, but also goes for you with your finances. If it looks too good to be true, it definitely is too good to be true. It's probably a scam or a fraud. So when I was looking at those trainers and 50% off, I thought that is amazing. There's no way. And it was too amazing to be true because it was a complete scam or a complete fraud. Now, there's all sorts of different activities for scammers to get you to invest in. But there are other ways in which they'll try to open up a conversation with you. And I could tell you all about forestry and overseas properties and parking and those kinds of investments. They are fairly fraudulent, those kinds of areas. But the key thing for me to mention on this slide is the key phrases that you might come across. Now, obviously, there are things like pensions reviews, pensions liberations, things like loans, anything that mention the word loopholes. There aren't loopholes, they tend to be illegal, and things like guaranteed returns. If you're investing money in something, you're not going to get a guaranteed return. So please be aware, those are the red flags for you. The other thing which I really want to mention, because it's super prevalent at the moment, is what we call pensions liberation scams and frauds. They'll say to you, don't worry, you don't have to be over the age of 55 to get access to your pension. What we can do is we can liberate that pension, move it offshore, move it onshore, and you can get access to the money. Can I just say you can't do that? It's illegal. You cannot access pensions before the age of 55 unless for two reasons. Number one, you pass away, in which case you can't access them anyway. It's your next of kin that access them. Or in some cases, you are terminally ill and about to pass away, in which case there are special circumstances there. Other than that, absolutely not. Now, that age of 55 is soon to increase to the age of 57 in the year 2028. So, again, I'm mentioning this because I've personally seen dozens of emails pass through my own personal account. The rubbish that gets in there, you just delete them all away. But I guess some people do think, well, yeah, I'd quite like access to my pension early. I need the money now. Well, you absolutely can't do it. And another thing, very quickly, just on the theme of pensions again, another thing that we see very regularly with scams and frauds is saying this is an investment that can give you a better rate of return than your pension scheme. Absolute tosh. Pensions are the number one place to put money because, number one, you get tax relief on the money going in there. So you're either 20% up or 40% up straight away. Secondly, most people on here will be part of some kind of workplace pension scheme as well. The employer has to pay into your pension as well. So they top up with their money on top of your money that you've put in. There is no other investment anywhere else that has that kind of leap in value immediately on being paid into the account. So if anybody says anything like, oh, we can get better returns than your pension, a pile of tosh and probably a scam or a fraud. So something to watch out for. Now, whenever you are speaking to anybody about investments, pensions, they are all have to be regulated by the Financial Conduct Authority, the FCA. They have a website, fca.org.uk. It's that simple. If you want to know if the person that's talking to you is a regulated person who is authorized to speak to you, again, it takes 30 seconds to go to their register, which is on the main front screen on their website, and you can do a search by name. Now, if you want to go and do this right now, you can go and search my name, Adrian Firth. My actual registered name is Russell Adrian Firth legally, but it will come up under Adrian Firth, Russell Adrian Firth, also known as Adrian Firth. I am there. You can see that I'm authorized and regulated. So therefore, you can, if you wish to, have a chat with me. Now, I'm not selling any financial advice. We're only here to answer questions and help people to manage their money better. But nevertheless, if you want to go on there and look up Mark Redmond, you will also find Mark there as well. So anybody that you could be speaking to. Also, the Financial Conduct Authority are super good and they know a lot of the scams and the frauds that are taking place in financial services. So they put them on their website for you. So if you go on ScamSmart, you can actually see, and pension scams as well, you can actually see from their website the types of scams and the types of frauds that are taking place. So if you've been approached and it's on that website as a scam or a fraud, then you know you're being taken for a ride. So do go on there and have a look. Just very quickly before we finish, I want to just very quickly cover what happens if you're a victim of a financial scam or a financial fraud. And I guess the starting point here is it depends how you've been a victim, how you've been defrauded of money. There are various different ways that you might pay for it. I'll just quickly go through them one by one. The best guarantee that you could possibly have is using a credit card for some kind of fraudulent activity, fraudulent product, something that never shows up, being taken for a ride, because credit cards have insurance built into them. Now, previously we talked about debt and borrowing, and normally we say, well, don't pile a load of money on a credit card. But the flip side of credit cards, and the reason why they're incredibly useful, is because if you're paying for goods and services, when you pay for them with a credit card, they are insured. And if something happens to that product or it doesn't meet your expectations, it's insured through your credit card for anywhere between £100 and £30,000 as a maximum. So again, if you're a victim of a financial scam or fraud and it's within those numbers, you paid for it using a credit card, or there was a credit card involved, then you have insurance that's going to protect you. Not a lot of scams and frauds take place on credit cards, but nevertheless, that's one useful feature of credit cards, is the insurance that you have with them. Quite literally, I have known somebody buy a brand new television, drop it on the way out, and claim on the insurance from the credit card because they paid for it and get another one. Um, Most people have scams and frauds taken from their debit card, their bank account, in essence. The banks operate something voluntary called a chargeback scheme. Now, the chargeback covers transactions up to £100, and it is voluntary from the banks. Again, through this voluntary agreement with the banks, I don't know why they don't formalize it, but through this voluntary scheme, you might get more back if you've lost more money. You might get less back if you've lost less money. It really depends on the individual circumstances. But can I say the number one priority is to talk to the bank straight away, make sure nothing else gets taken from your account, block it, get issued with new numbers, new cards, and secondly, ask for redress. Get them to investigate it. They have the ability to investigate where that money's gone to. Is there any chance of tracing it and getting it back? And if not, can they redress you for the money that you've lost? But there is possible compensation there from bank cards. I think if you have used things like PayPal or payment sites, then they are not part of the voluntary redress scheme, and they don't offer anywhere near the same cover as credit cards. So there may well be no redress through that. Now, the number one thing to bear in mind is that the number one kind of payment site is PayPal. There are dozens and dozens of fake PayPal sites that have been set up and are still operating. And as fast as they close them down, new sites keep popping up. So I think if you are going to use PayPal, is to have your own individual account that you log into with the legitimate website. Don't use third-party PayPal connections to make payments, because that's where you're opening yourself up to fraud. And lastly, if you use anything like wire transfers, we are talking about MoneyGram, PayPoint, Western Union, those kinds of money transfers. Again, there's little to no redress through those. So again, watch out for that, because the MoneyGram transfers, PayPoint, Western Union, those are regularly used by criminals, because there's little or no investigation and no redress for you. Now, whilst we're also on the theme of looking at our money and looking ahead, this is something that I've covered in the past. It borders on criminality, but it's not. We have seen things like cryptocurrency becoming mainstream, and you are currently, undoubtedly, like me, being bombarded with messages about opening a dealing account, getting onto a trading platform, moving money around. So again, I'm not going to spend all evening, because I know my time is running short now. But I'm not going to spend all evening, but I am going to remind you that the reason why cryptocurrencies exist is to facilitate illegal activities, tax evasion, Cryptocurrencies also used for fraud. They're also used for purchases on the dark web, drugs transactions, and money moving money around the world. That's why they exist predominantly. Okay, there's no getting away from that. But they've become very mainstream as a way of an investment because the fluctuations in values of these cryptocurrencies are huge, and they fluctuate very, very regularly on a daily basis. They literally go up and down like a fiddler's elbow. Can I just give you some quick information on cryptocurrencies? Because eToro, which is the UK's #1 trading platform, and I'm going to read the stats that are actually on my official speaker notes, are just below the screen here. They report that 67% of trades that people place lose money. 70% of people who open a trading platform account in the UK lose all the money that is in that account within 1 year. Can I say it is not the norm to open a trading account, become a online trader and earn money from doing that? You could obviously earn huge sums, but the statistics show that you're going to lose large sums from doing that. So it can be very tempting, but I just want to underline the fact that it is fairly dangerous to go into day trading, cryptocurrency trading. You are not going to own an island and an aeroplane by this time next year. You're probably going to lose all the money that you put into those kinds of endeavors, but they are endemic. And, you know, one person makes money out of it. Everyone thinks we should all be in there. Um, if you have little experience of dealing with finances, you're confused about making decisions, it might be helpful to get professional help. I have already mentioned the fact that you should talk to a financial advisor. We are all, I am a financial advisor. We're all super approachable. You can ask us questions. We'll answer those questions. We're not going to charge you for it. We'll just say, yeah, that looks like a pretty good idea, or no, I wouldn't consider doing that. And so you can approach one and ask the questions and hopefully get straightforward answers to the questions that you have. All advisors must be registered with the FCA. Anyone who speaks to you about financial products and services will be on that website. And I just need to be very clear. Sometimes financial advice in a written form, making a recommendation as to what you should do, is probably going to cost you money because you're at the point where a written recommendation is being given to you. But up until that point, most financial advisors are just happy to answer questions and chat to you and talk to you. Now, I've mentioned a number of things on the way through the webinar. The first one is to come back to that point about debt and money worries. If you are struggling with them, do make that list. One thing that annoys Mark and I, because we do these webinars on a regular basis, is that there are a lot of commercial organizations touting their services to help you with debt consolidation. You do not need to use them at all. All they're doing is earning commissions and fees from doing that work when we have very good systems and processes in place to help people with financial difficulties. And there are multiple solutions to multiple problems. But what I want to underline to you is if money and worries are weighing you down, this is one of the easiest things you can get sorted out by going to Citizens Advice, the Money Helper website, stepchange.org.uk, and also the National Debt Line. Those are 4 organizations. They are as good as any commercial organizations, and they will put a solution in place for you, which will get you back on your feet. And you'll wonder why you ever worried about it, because it was so simple to get it sorted out. So talk to them in the first instance if money does become a worry. We also spoke about shopping around and getting the best possible deal. You don't need me to tell you which sites you should use. They are the Meerkats and the Opera Singers and the Money Super Sevens of this world. So go online, have a look, pop in your details. I promise you, it just takes 10 to 15 minutes of your time. Now, if you wanted to get fit and you want to get healthy, you'd set aside 10 or 15 minutes at least to go out and get some exercise. If you want to do that with your finances, you need to set aside that time to do it. And lastly, a lot of the things that I've spoken about on the way through the webinar are all covered on the main money type websites, which have lots of facts about personal finances. Now, I could tell you all about Money Facts, and I could tell you all about the Money Helper sites, both very, very good. But there's only one that we all really need to use, and that's the moneysavingexpert.com website. I'm not allowed to recommend products and services to you, but that's the best website to go to. It's Martin Lewis's website. He's on TV, he's on the radio. He runs by far and away the most comprehensive website that covers all of the things that I've spoken about on the way through. So if you get the opportunity to, after today, and it's of interest, just log on to the moneysavingexpert.com. Also, sign up to get their free weekly email. Sometimes they're not of any use, those weekly emails, but they're a reminder that you should keep using the site and keep checking things to do with your personal finances. So get on there, take a look, and it will help you dramatically. Now, I'm very conscious on the way through that I've spoken about an awful lot of things, and I can see a red dot on the right-hand side. I'm not going to look at the questions because they're distracting for me when I'm presenting and going through. But Mark, hopefully, if you want to turn your camera and sound on, and Steve obviously is there in the background as well. If you want to turn your camera and sound on and join us, hopefully the builders have departed now. First of all, can I ask Mark, have there been any pertinent questions that we need to capture for the recording at the end of the webinar?
Do you know what? There was a corker, which is when you were talking about opening bank accounts, does it affect your credit score? And the short answer is yes, it does, because the bank you're about to join is going to do basically they call it a hard credit check. Don't panic. The impact of it is pretty negligible and it's very short lived. So if some of you are out there looking for some money and you want to pick it up, do so. Might have a slight impact, but not very much at all. And just watch out. One thing that's creeping up a bit on the scam front is QR codes. Don't know if you have seen them. Somebody will put something in a window, and if you want to buy something on a special deal, just scan the QR code. They're after your details. That's all they're after. So just wary about that. Otherwise, Aid, I think you've covered just about everything, and I've certainly cleared all the questions that have been asked.
And I noticed that we've got a QR code on the screen. So yeah,
ours is a good one. It's straight to a website.
It's a legit one.
You're not buying anything.
And Steve, hopefully you have just a moment to say something at the end of the webinar, and we'll capture that as well.
No, fabulous. Thank you so much, Ed. Thank you so much, Mark, for your continued endeavours and giving up your time for us, and the people on the webinar this evening and the wider communities of our game. It's very much appreciated. Really looking forward to the next one, which is scheduled for mid-June. Which I'll pass on all the details to, through our streams of people as well, to make sure as many people get onto that next webinar that would like to get onto and can access this fantastic informed education session. So just a massive thank you to everybody that's taken the time to register and attend. But thank you so much again for your time this evening. I really appreciate it.
You're more than welcome. And thank you to everybody that's seen it right through to the bitter end of this webinar. I hope it's been interesting. I hope it's been informative. As Steve said, we will be back again in June with another webinar. So other than that, thank you so much for joining us. Bye for now, and see you in June. Take care.